My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. People make friends. I'm just trying to make you a little money. My job is not just to entertain, but to also teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Oh, yeah, that's right. President-elect Trump is mercurial. Turns out he's capricious. What were we thinking? That's what's going through the minds of almost everyone I speak to on Wall Street. Heads turning over many of Trump's picks for important jobs in the administration. You could possibly hear the air going out of the euphoric post-election boom as a further rise in bond yields and a fear of the Trumpian unknown combined to push the Dow down 306 points. S&P tumbled 1.32%, and the Nasdaq plunged 2.24%. Bit of a bloodbath over there in the Nasdaq. Now, look, I've told you there are many pitfalls with individual stocks when it comes to Trump 2.0. Most of them are buying opportunities, but with stocks still up so much from a few months ago, you can't be too eager to buy the dips. Everybody's facing the same dilemma. We own some really good stocks for the Charitable Trust, and they've gone up so far that, well, they got to come down a little before I would think of buying more. Right now, it's just not that appealing. New stocks intrigue us, but we need to see more of a shakeout before I'm willing to pull the trigger. And the reason is, just so you know, I don't like to be down on a stock the day I buy it, and I feel like that could be the case. So with that in mind, why don't we go through the game plan for next week? We're going to start with an analyst meeting for Vertiv. Hey, by the way, they rang the opening bell today. It's a pure-play data center supplier. It's a fantastic company with an amazing chairman, Dave Cote, who's late of Honeywell, and I like it very much. No Trump issues. But like so many other good stocks, Vertiv's at 120, not far from the 130 high it reached on Monday. You can put a starter position on here, but I'd rather wait for a little more weakness. Tuesday morning, we get earnings from some really high-quality retailers, Walmart and Lowe's. Now, Walmart's had an amazing run. It's up 60% this year. It's almost in a straight line. This is a big-cap company up 60%. Wait a second. That's amazing. Now, this is the kind of stock where we need to see some sort of pullback before we get too excited. I think we reached a short-term top this week in the stock, so I don't want to plunge in and just start buying it right now, even though the great ones, like Walmart, are going to continue to be good. Don't get me wrong. I bet the numbers will be excellent. Maybe they can even turbocharge the stock from here. But up here for me, you only have my blessing to put a small position on. Now, Lowe's is another terrific story. It's a home improvement company that's one of the best there is. We happen to own Home Depot for the Charitable Trust, but Lowe's has a very similar story, and it's one that tends to do very well when the Fed's cutting interest rates. Worth watching. Medtronic reports, too. I really like the new Medtronic with so many good medical devices, some of which are very successfully integrating artificial intelligence. It has been a winner. Okay, I'll give you something that might be worth buying, but both before and after earnings. It's Viking. Yes, Viking Holdings. The cruise stocks have been fantastic, haven't they? This one's a little behind the others, even if it's had a big run. I buy more on Monday. And if you don't get a chance to buy some more on a post-earnings weakness, well, just say you got a nice position on high-quality problem. Tuesday also has a Caterpillar analyst meeting. I think it can be bought. Caterpillar's just pulled back from 418 to 384, where I like it very much. Great Fed rate cut stock. Maybe buy some more, buy some CAT here, and then buy some more if the meeting doesn't excite people. Wednesday we hear from investing club favorite TJX. That's the parent of TJ Maxx and Marshalls. This company buys excess inventory from other retailers, the ones that would be paying the Trump tariffs if they get enacted. The stock just had a magnificent run, and it has a habit of selling off when it reports. So be careful. The headlines tend to be very misleading, and a lot of jokers come in, they buy it, and then they sell it when they finally realize that they didn't know what they were doing. Target intrigues at 152. That's down big from 188, almost 3% yield. People are so worried about tariffs that you might want to wait and see with this one. Wall Street's sweating this Williams-Sonoma quarter because the hard goods stocks seem to have stalled here with that pickup in rates that we just had. At 16 times earnings, stock down 44 points from its high. I think it can work. Really excellent company. Terrific CEO. Can catch on fire if the world believes that the Fed is going to continue with cutting rates. Then after the close Wednesday, we get big and then bigger. Palo Alto Networks and NVIDIA. Palo Alto's had a gigantic move, just like all the cybersecurity stocks. The stock has sometimes sold off badly when it reports. Could be an opportunity. NVIDIA. All right, now, NVIDIA, let's talk about this. I think that NVIDIA's last quarter fallout, the huge decline that I told you to buy, not sell, it could occur again because they're just these crazy watch parties, the sunshine soldiers, the people who don't even know what NVIDIA is or does. You know, I love NVIDIA. I always say own it, don't trade it. People don't listen to me when it goes down. They panic out. I'm trying to stop that. Now, I have to tell you, I think you should, if you don't own it, just wait, okay? The stock's struggling here for now. I saw some guy earlier in another show saying he's worried about NVIDIA. Well, of course you're worried about NVIDIA. You always worry about the large ones, but I can smell the trader nervousness. I don't want you taking out a trader, okay? Let them sell, and then you buy. Thursday gets easier, right? Gap reports, I'd definitely be a buyer ahead of the quarter. The stock's back to 21. I can't believe it. CEO Richard Dixon is reinventing this place, and I think it represents tremendous value for aspirational, accessible apparel. Now, it's come down thanks to tariff worries, but I think that's looking good. The Gap, wow. I think it's being looked through the wrong lens. I think it's a very inexpensive stock. One of my absolute favorite enterprise software companies reports after the close. That's Intuit, the small business person's best accounting friend, as well as company behind TurboTax. Now, this is one of the best software companies that and it can save you a fortune if you're a young entrepreneur who otherwise would spend a fortune on accountants. But, and this is a big bite, Intuit was at 610 at the beginning of the month. Then it went to 714, and now it's at 683. How can I pull the trigger on a stock that's so close to its high, yet so far from where it was just a month ago? So many stocks are like this, and I just can't get excited about them until they cool off. I'm willing to say no to the opportunity because I don't want to get hurt. We want to take the temperature of the market, and the best way to do that is to listen to the the Procter & Gamble analyst meeting. Procter does a fantastic job. Few companies explain so much to for those who are thirsting for knowledge about companies themselves. Procter's got insight in everything from China to raw costs to tariffs. P&G dodges nothing. I love it. Finally, we got this thing, GE Healthcare. Okay, this is a stock that's been owned by the Travel Trust. It's been pummeled because its former parent, GE Aerospace, sold 13 million shares that it happened to own at 88, and then the stock got crushed because there was no buyers underneath. It was placed very poorly, and that's why it's at 81. This is very strange for this incredibly high-quality medical company to fall so quickly. Now, I think they will tell a very, very good story. I think that story will resonate in part because the stock's well off its highs. That's exactly the kind of thing that I am looking for. So let me give you the bottom line. Even though the post-Trump rally hangover has been vicious, it still hasn't taken most of the market down to levels where I think it makes sense to buy. Now, I just gave you some nuggets. I think they could be golden, but I think it's more important to prepare yourself for better opportunities, at least in the near future. Why don't we start with Chris in Illinois? Chris.
Hey, Jim. First-time caller from Chicago. I've been a club member for just over a year now, and joining the club is one of the best financial moves that I've made. So thank you.
Thank you. Thank you. We work so hard. I'm going to tell Jeff Marks that, too. I know he's just constantly working. Constantly. How can I help?
My question is regarding AbbVie. So as you know, the stock was punished this week with news of disappointing stage 2 trial results of one of the drugs in their pipeline and the prospect of RFK Jr. as the health secretary, even though AbbVie is not one of the primary vaccine makers. So is now a good time to initiate a position, or should I wait until the dust settles?
Really interesting you asked that. I turned to Jeff when I saw the stock that was down. Jeff Marks, who works with me at the club. When I saw the stock down $4, I said, okay, Jeff, we got to put this in the bullpen. 4% yield. It's come down a lot. And he said, look, let's save it for Monday to start doing. I said, that's absolutely right. But we do think that I think it's right to buy a starter position on Monday morning. John in Michigan. John.
Hey, Jim. Love the show.
Thank you.
I was wondering if you could give me a twofer.
Okay.
Enbridge, and the bottom of oil. Where is the bottom in oil?
Okay, I use Rusty Brazil, RBN Energy, and we both think that there's a lot of oil being pumped. Not a lot of demand for the oil. So that's what we're trying to find. Now, Enbridge is a stock that I have liked so much. Greg Ebel did a great job. It was at 35 when we had him on, and now it's at 43, but it still yields 6. My blessing to buy. How about Trey in Texas? We've had Trey before. Trey.
Jim, I really stepped in at this time. My wife and I decided to hire a contractor to put up Christmas lights on our home this year, but I didn't like the quote, so I paid a crew member from the company $500 less to do the work directly against my wife's wishes. As it turns out, his price was preferable due to his lack of insurance expense. And when he fell off his ladder, our lawyer now says he may own our home next Christmas. Obviously, I find myself needing a monster return to cover legal fees, a marriage repair retreat, and potentially a second mortgage. Could Micron help me through this predicament?
if it was like if it were number 2 with me, I would say that only if you could own the whole stock of Micron. I will tell you that Micron is not the stock that you need for those 3, and I'll tell you why. Because I need you to accept the fact that right now, after what happened this week with Applied Materials, that people are going to send the Micron to 96, 98. I'm sorry, they're going to send it from 96, 98 down to 91, 92. And there, I think that it can start making up at least for the unfortunate Christmas light. I don't know about that, the marital issue. That's unfathomable, frankly. Let's go to Isabel in California. Isabel.
Hey, Jim. Hope you're having a great Friday despite the sell-off.
All good. All good. How about you?
Great. Thank you so much. You've helped me so much recently in the market, and I took your advice recently, and I made a position in Robinhood. I'm thinking about holding on to it for the long term, but I want to take advantage of this.
I want you to do it. I think the stock is overextended here. It's well above any of the price earnings multiples of anybody else. However, it is a cult stock, and therefore, like Coinbase, it can be owned because the cult stocks are working. When will they run out? I will certainly be available every single day for years to tell you whether they're going to run out or not. So stick with it for now. It's probably going to go higher. All right, now we've come down from our election rally highs, but I still don't think we're at the levels where I feel comfortable telling you buy, except for individual situations, as I showed you in the game plan. All right, I say keep waiting a bit. Mad Money tonight. New Orleans-based Entergy popped to a new high on its latest report. Is there more power ahead for the stock? I got the exclusive. And are soft sales a cause of concern at Columbia Sportswear, given how quality stuff they have? Why don't we do this? Let's talk to the CEO through innovation and navigating the current market trend, which is very hard. But first, I'm checking in with Dover's top brass after the industrial players' positive outlook and, yes, indeed, our talk yesterday with club members of the CNBC Investing Club. So stay with Cramer. Well, it has been a great year for Dover. The diversified industrial manufacturers made a big pivot toward the data center, biopharma, clean energy in recent years. Now, this stock is up 30% for 2024, thanks to its embracing of the mega trends that we think are so important. Even with today's market-wide pullback, it remains up nearly 5% since the election. So can this thing keep running? Let's check in with Rich Tobin. He's the chairman, president, and CEO of Dover to get a better sense of this story. Mr. Tobin, welcome to Mad Money.
Pleasure to be here, Jim.
Okay, so Rich, big position in our trust, and one of the reasons is because of your stewardship. You have taken a very good company and turned it into a great company that is embracing all the major mega themes that are secular in nature and aren't responsive to whether the Fed's doing this or the economy doing that. How did you have the sense to do this, and where are we in the transformation?
Okay, well, I mean, it starts. I was on the board back in 2016 before they asked me to be the CEO, so I came in with a little bit of a running start in terms of what the portfolio was capable of. I would categorize the first 3 years of my tenure more of moving from a holding company structure to an operating company structure. That unleashed a lot of margin potential that I think you can see in terms of the past performance. At the same time, we delayered the organization. We basically swept away 80% of the non-customer-facing activity of these smaller operating companies. And that's great from a cost perspective. Everybody gets that. But more importantly, what allows the presidents of these relatively medium-sized operating companies to do is spend 90% of their time on R&D, manufacturing the product, and understanding the customer. And I think that is really the phase that we're in right now.
Well, you do have a specialty that I love. You want to be the #1 company in companies that don't have like the gigantic total addressable market. But you take a company like Marshall Excelsior. Maybe this is the one we could use as a way. Is that a good way to do it? Too complicated?
I think that I think that we would categorize what we do, both internal R&D and external M&A, as a reverse funnel. We have operating companies that are in very small, focused TAMs. Generally speaking, we're not competing with the heavyweights. We're competing with private companies, and we think that's a distinct advantage to us in terms of cost to serve, number one. And number two, we tend to buy a lot of adjacencies around existing positions. And so Marshall Excelsior, we've spent $1 billion plus over the last 2 years in getting into cryogenic components. It's an area where we know the customer.
Right.
It's highly regulated. It's precision components. It knocks everything. That's our sweet spot.
And we couldn't think of anyone else that was in the space. That's why I mentioned it. Now, also in the data center, you're in maybe the most important niche of the data center when it comes to liquids, because that's the direction. Mm-hmm. That's the direction. And there's not a lot of companies that have that expertise. We couldn't find anybody other than you.
Well, it's a big, complicated TAM at the end of the day, right? Are we talking about billions of dollars of building these centers and the like? It's kind of an interesting story. We have a connector business, which everybody thinks is a biopharma business, which has been highly lucrative of us over the past 5 years. But really what it is an engineering company that does connectors. And it had a side business that was providing connectors for liquid cooling to supercomputers. To Cray and IBM, a very, very small niche TAM, because the power requirements of supercomputing required water cooling.
Right,
well, here comes Jensen Huang, here comes NVIDIA, and who's standing there with a product that fits right there. So
and Jensen wants liquid.
Jensen he needs liquid.
Yes, he
and
needs
he may
liquid.
need cryogenics after liquid.
Well, that's what I'm hoping is that you kind of backed into that, though. You're number one in it. But it would be incredible if it turned out to be that's the next level. But that's the only way to keep the heat down and therefore make sure that the grid isn't overtaxed.
Additionally, on the other side of it, we do brazed plate heat exchangers, which is a product that's derived from district cooling. If you think about these huge cooling packages that need to go into data centers.
But also CO2 refrigeration systems. Again, niche but powerful.
Yeah, I give it all the credit to the management team. A decade ago, they bought a small company in Europe. We ended up being the market leader in Europe. We saw the transition to get away from HFCs in the U.S. coming. We purpose-built or repurposed a plant 2 years ago in Conyers, Georgia, re-platformed the entire product line. And, I was on the phone today with the guys who run the business, and it's highly successful.
Fantastic. Now, you do have some dry powder.
Mm-hmm.
You also got out of a business that I think most would say, well, listen, trash compacting, kind of low tech,
mm-hmm.
and you go into higher tech. So you've got money coming in. You could also sell. There's another business. I don't want to mention anyone who works
mm-hmm.
at a company might say, well, he just told me that he's being for sale. But you have some businesses that you could still sell. With that dry powder, is there anything you can buy right now or you're eyeing that will make it once again an even faster growing? But again, at kind of a less cyclical. We don't want the cyclical.
Yeah, there's a lot of ways to answer that question. I spend 90% of my time with the board of directors on sum of parts analysis of the individual pieces of the portfolio, looking over the horizon of future return on invested capital. Because when it's time to monetize something that we think is a premium to how it would trade on a comp basis, we got to be ready to act. And in the situation with the garbage compacting, we've had that asset for a long time. For a return on investment, the management team did a fantastic job there. But the fact of the matter is, on a sum of parts basis, it was never going to trade at the Dover multiple, right? So we had to act upon that. We're very popular right now for all the liquidity that we're sitting on. Two things. I think the size and scope of the companies that we'll buy will probably be the same as our track record. Okay. And the discipline, I think, that we've used in terms of valuation will remain the same. If you go look at capital allocation for us, I think it's been relatively balanced between capital reduction and M&A. We want to be on the front foot, but let's see what valuations do.
Okay, so from the point of view of us as a shareholder from the Charitable Trust, I worry sometimes, is it just going to always be evolving, or eventually are you going to have the tent poles and we don't have to think that one day you'll say, you know what, aerospace is really strong, we're going to be in aerospace?
I think there's plenty of adjacency space. We've already got 5 segments. I don't think anybody's going to wake up tomorrow morning and see a 6th.
Everyone's kind of getting wise to what you've done here, because when the company reported, you said, look, there's going to be things that are headwinds. They're going to go to tailwinds. The China situation, don't worry about it. Beverage cans, fine. And people listened and they bought. I mean, when they don't trust you, they don't believe any of that. People know that Rich is going to deliver.
Well, maybe not Rich, but Rich's management team.
Okay, fair enough.
And as we talked off air, there's always a big debate about how much transparency to give a portfolio. We recognize that ours is complex, so we just put it right out for everybody to see.
Well, for us who are really, geeks and wonks about different kinds of companies and where you are and where you're going, I think it's one of the great combinations I've seen in my life. So congratulations to your team and to Rich Tobin, who's the chair, president, and CEO of Dover. This is the kind of company you need to study. You need to learn how to look at companies like this, and you will be such a good investor if you do. Mad Money's back after the break. All right, we got a huge bull market in the domestic power producers because we need insane amounts of electricity to fuel those data centers we always talk about being built all across the country. That's caused some huge runs in the independent power producers. But at this point, we got to think it makes a lot of sense to bet on a basic regulated electricity utility, maybe. Take Entergy. That's a New Orleans-based utility with a stock that's rallied 47% year to date. That's an insane move for a regulated utility, but it makes sense. Entergy rolled out an incredibly bullish long-term outlook at an analyst day back in June, and then when the company reported a few weeks ago, they raised that forecast even further because business is just that good. Do not take it from me. Let's dig deeper with Drew Marsh. He's the chairman and CEO of Entergy. To learn more, Mr. Marsh, welcome to Mad Money.
Oh, thank you for having me, Jim. Happy to be here.
You rang the closing bell. What was the occasion?
Oh, it's our 75th anniversary of being listed on the New York Stock Exchange. So we are very excited to be here. And what we heard is we're one of only 50 companies that have made it that far.
Well, that is fabulous. Congratulations.
Thank you.
That's the kind of company we're always looking for long term. We don't want traders in our stocks. We want long-term holders because that's how they do best. They compound the dividend, really works out. Now, here's something that I saw. I've never seen this in a utility. So Wells Fargo piece, and it says, Entergy, a drop the mic moment. Now, come on. How is that possible? The utility had a drop the mic moment. What did you say at this meeting that caused that?
We raised our earnings expectations higher than they anticipated. So most of the industry is in a range of 6 to 8%, 5 to 7%, and we went up to 8 to 9%.
Well, that is remarkable. Now, it helps. You've got some incredible industries where you are that are really in a renaissance, correct?
That is correct. So for years, and you know this, you've been down along the Gulf Coast.
I love it.
And you've seen it, right? The industrial growth that we've had has been growing substantially. For 14 years, we've had over 5% compound annual growth rates with really large industrial base.
And it's not slowing down, right? There's ports being built. There's LNG, ammonia, material processing, chemical processing. These are all happening right now.
It is. And with geopolitical uncertainty and broken global supply chains, everybody wants to come to the U.S. And when they look at the U.S., they look at the Gulf Coast because of all the advantages.
Yeah. Now, I would say, not political in the show, but we know that in January, President Biden put a pause on LNG. Now, my friends who are in LNG thought this was devastating because these are very long-term projects. They're all hoping that with the new president, maybe that pause gets lifted. We go back on that track because there are multiple years. Every year there'll be new plants that open.
There is a lot of opportunity out there. In the next 5 years, we have several LNG customers that are coming online. And then there's the big opportunity for even more.
Now, you had a very cryptic slide from that meeting. ELA investment to support new customer. Is this a top secret new customer?
We don't typically talk about our customers unless they talk about themselves. But
we know that there are a lot of big, what we call hyperscalers that need lots of electricity. Could it be a hyperscaler?
It could be.
Okay, fair enough.
We have a tremendous growth opportunity in that space. Just a year ago, our expectations in the hyperscaler data center space were zero.
Right.
And now we just put out a forecast that said we expect 19 to 20 terawatt hours of power by 2028, which isn't too far away.
Well, let's remember, you have got a nuclear power presence. What, about 27% is nuclear?
Yes.
Now, I was down in 2012 when the Super Bowl, the 19-minute delay, that was a controversy between your guys and another guy. But one thing I learned was that you actually have room to build more nukes.
We do. We have an early site permit at our Grand Gulf site, which we put in place in 2007. And that's a pretty big deal. It takes a long time to do all the geotechnical work to figure that out. We have that issued from the NRC. We have a lot of customers that are interested in that. And not just the data centers, but also traditional industrial customers. And that's having that in place is like starting on first base. For our customers.
We think it's great. Now, I was a ratepayer for Exelon. It was kind of this boring Philadelphia, Chicago utility. And then suddenly they came out with Constellation. Yeah. Is that something, would you like to do a renewable split, or is it all good to have it under energy because it's making a lot of money for people?
It's all in the vertically integrated rate-regulated utility. So we are very comfortable there, and it provides all the access and growth that our customers need.
Do you think that under this new president, like an Elon Musk could come in and say, you know what, we got to rebuild the grid, and we got to have a nuclear grid and be able to streamline nuclear so that you could build all the ones that you wanted, because we've decided that's the cleanest power?
We are very bullish on nuclear power for sure. In our forecast, we have all kinds of power in there. We have
you got a lot of solar that's coming on.
A lot of solar generation. We are looking at carbon capture and sequestration. We have a DOE feed study going on. We are also looking at nuclear. We don't actually have any of that in our forecast, but we are working closely with our customers to see if we can crack the nut on how we're going to share all the risks to make that a reality.
Okay, I know we've had Entergy on, your predecessor, and I always liked it just because my daughter went to Tulane. I said, 5% yield, I get to visit it. But you are one of the great growth companies in America right now, aren't you?
That's where we're headed, and we have a whole bunch of growth opportunity. We still have a lot left in the tank. There are lots more opportunities on traditional industrial growth as well as on the data center side.
Now, do you get a call like once a week from a new company that wants to come in your area and ask if you have enough power? And can you say yes, or do you have to say, listen, I don't know if the grid can handle us?
Well, that's what we're in the business of doing, is providing that power. And so we have a lot of engineers, and they can't be more excited than to provide power to our customers.
Can the grid handle what you have to do?
Oh, yes, of course it can.
How come everyone else tells me the grid can't in all these other areas?
Well, we're going to have to build and invest to make that happen. But yeah, once we make those investments, the grid will be able to handle it for sure.
And the last thing I want to try to figure out is we have the LNG, we have the natural gas that the rest of the world needs. Could you please explain to people how, and this is something that I had a hard time talking to the White House about, that we could be in command of lots of different economies around the world if we want to be powerful, because ours is the lowest cost, and you can make this happen?
Yes, well, our customers can make that happen.
But they couldn't do it without your power.
That's right, and that's why we're here. And so they are definitely moving forward. They are growing. They're putting pipelines. We have the ability in Texas and in Louisiana to bring gas to the coasts within the states, so you don't have to cross the state line. And that creates a lot of opportunity for our customers and the world. Well,
I want people to look at this stock. You know, American Electric Power has been my preferred way to play the energy group. Everybody knows that. But I've got to tell you, Entergy, if it can come back down at all, I think you have to go buy it. That's Drew Morris, Chair and CEO of Entergy. Great story. Thank you, sir.
Very much.
Mad Money's back after the break. What are we supposed to do with the stock of Columbia Sportswear, the outdoor apparel and footwear company? You know, is Columbia, Sorel, Prana, Mountain Hardwear. Oh, don't forget Performance Fishing. We love that stuff. The stock's been trading sideways all year. But when Columbia reported at the end of October, they delivered a set of better than feared numbers, including a solid earnings beat, even though their sales were still down 5% year over year. The stock soared on the news, but even here, it's only up 5% year to date. So can these guys turn things around? Let's take a closer look with Tim Boyle. He's the chairman, president, and CEO of Columbia Sportswear to find out. Mr. Boyle, welcome back to Mad Money.
Thanks, Jim. It's great to be with you.
Okay, so Tim, we love your stuff, and we see all the great things, and we all use it and we wear it, and yet we still find that maybe it's doing better in Europe and better in China than it's doing here, and we're just kind of mystified why that's the case.
Well, you know, it's interesting. Of course, we love it when it's cold everywhere, and unfortunately, it's not cold everywhere all the time. But, you know, the focus on North America is improving our image and the desirability of the products, not by changing the products, but by improving the marketing efforts that we put towards the commercial parts of the business. So we're going to be adding a bunch of money to next year's budget to market our products more effectively. We've added a new agency that's going to help us be quite different in terms of how we approach the business and making our products more available and more knowledgeable. So we've got a lot of stuff working, and we're very excited about the opportunity.
Well, you should be. On the conference call, someone did point out that Sorel, we always figure it's going to be $1 billion brand. It's doing 250. It can be $1 billion brand, right? Isn't it the best name, the best functioning, good-looking shoe in the market?
Absolutely, and it's incredibly well known as a winter footwear brand. The goal has been and continues to be to make it a year-round brand, and that will allow us to expand our distribution to the approximately 100 countries that we currently sell Columbia in.
Well, now how about PFG? Is that important enough?
It's fabulous. I mean, it's incredibly important. I was meeting with several of our big customers this week to talk about our marketing efforts for the future. And PFG remains an opportunity for us, especially in the southern part of the United States.
I'm glad to hear you say that. I mean, I took a fishing trip to Panama, and we all met. We all got on the plane. We all got there. And what do we have? It all came separately from around the country. Every one of us had PFG because that's the brand that we know that's a professional. We'd be embarrassed if we didn't bring PFG. That's got to get known.
Well, and your fishing prospects improve significantly when you're comfortable and working out and looking good in PFG.
You're absolutely right. Now, let's talk about the thing that people were concerned about. You used to make a lot of stuff in China. Obviously, a new president comes in, not a fan of China. But you've been leaving that behind, correct?
You know, we've been moving our production around for quite some time. And I have to say, I normally don't brag about the company in terms of our abilities, but frankly, we purchase products from around 19 or 20 countries, and we sell to over 100. And to do that, you have to be able to navigate the vagaries of tariff rules that exist around the world. We have some countries like Brazil, 132% duties on footwear, and other countries like Mexico at one time had 300% duty on products from China. So we think we're quite good and very adept at moving production around to satisfy the local demands and get our products into those markets at a competitive price.
Now, I know you said that, look, we're just going to get the marketing out better and you got the right price, but you always are innovating. I always find that there's something new that our viewers should know about because I happen to be a buyer of whatever you do that's new because I know that you are, again, the best technical product there is.
Well, we try hard, and we have a number of new technologies. In fact, we have one that we launched just in 2024 fall, which is a biomimicry product that was designed to replicate the way a polar bear stays warm. And that's been a really fun product and excited to talk about and a real big part of our future.
You see, Tim, I've known you for a long time, and I have to tell you, there's something wrong that I heard that I'm going to go with my staff after, and we're all going to say, well, that sounds great, but we can't just hear it from the CEO. That's something I want.
I know, Jim, you've been very clear on that, and I totally agree with you. We have to get ourselves in a position where we're well-known and the technologies that we're so famous for, that we've invested so heavily in, get their due.
Yes, and I often find that there are a lot of competitors. But when you get to their product and you actually wear them out very fast versus yours, you look in the closet and yours are the ones that are left. They're always ready. They're always good. I think your men's boots, the ones that you gave us that have they look like silver inside, those are remarkable. Yep. Even if you're in water, they're remarkable.
Yeah, it's. I'm so proud of the teams that we have putting product together. We need to make sure that the world knows about them better. And we're going to be doing that for 25 for sure. And we've got lots of great things going on, and I just can't wait to have you see it.
Will it be social? Will it be TV, streaming? Where are we going to see it?
You're going to see it on a few different places, streaming as well, and TV, and some unusual stuff. And as soon as I can tell you about it, I'll get you the information. But you'd be excited.
Well, I got to tell you, if any one of these brands gets the brands are bigger than the stock, okay? Because they are the brands that we all want. And I know you will deliver. They are technically superior, and they are also, every one of them is, I regard as being, it's hard to destroy your stuff. It lasts forever. And that's why we like it so much. That's Tim Boyle, Chairman, President, CEO of Columbia Sportswear. Tim, it's always great to see you. Thank you.
Great to see you, Jim. Thanks.
Okay, Mad Money's back after the break. It is time. It's time for the lightning round. That's where Ralph Howard calls. These same minutes talk. I tell you about my sales manager, Cole Stock, my staff, and Prince, we play the sound. And then the lightning round is over. Are you ready, Ski Daddy? Time for the lightning round on Cramer's Bad Money. Let's go to James in Michigan. James.
Hello, Jim. How are you?
How you been? I'm doing fine, partner. What's happening?
I'm doing good. So in 2020, I implemented Block's Square POS system for my parents' Chinese restaurant, and it has greatly improved our business. Can we trust Jack Dorsey and Amrita?
Look, I have to tell you that I think Amrita, I don't know Jack Dorsey from Adam, but Amrita does a terrific job. And I will tell you this, I think I've been behind the stock for a very, very long time, even since the previous CFO. The stock has now had a major move at last, and it's not done. Let's go to Greg in New Jersey. Greg.
Thanks for taking my call, long-time listener. My stock is Northern Trust.
I've got to tell you, Northern Trust is very good, but I'll see your Northern Trust, and I'll tell you one that we've been buying for the Charitable Trust, which is BlackRock, and I think it's better. I think it's got better growth and more consistent management. Let's go to Phil in Michigan. Phil.
A shout out to my 84-year-old mother who is watching, and a roaring Detroit Lions booyah to you.
Oh, man. Well, you know, look, I think Lions could be meeting another team before they get to the Super Bowl and see what happens. How about let's make some money?
One more question. Can you bring your Mezcal signing roadshow to Michigan? I'd love to buy a bottle and shake the hand of the man who was helping the team
that's
add money.
What he's talking about. My wife's Phosphoro. We just had a big road trip down in Texas. I'm going to tell her you said that. She's been out of town working real hard on Phosphoro, and I appreciate that. We got to get it to Michigan. I do not think we're there. So go ahead. Let's go work together.
All right. I know you just removed the stock from the bullpen because of its China exposure, so that says a lot. With a cost average of $53, I'm in the house of pain on this international chemical commodity business since the presidential election. I launched my career in IT at this company nearly 25 years ago under Mike Parker and William Travaopoulos. It's my fifth largest position, currently sporting a yield in excess of 6%, a forward PE of 14, and an RSI presently under 20. However, the 2025 estimates have been on the decline in the last 3 months. Will this estimate trend continue with this stock being too toxic to handle right now, or is it my future too riches if I'm patient? The company is Dow Chemical.
Dow is very hard to own here. I had thought that it would stay with a 5% yield, like Pfizer. You know, you get these companies and you see 5% yield, you got to go on, but they're value traps. Dow has to do an upside surprise. Dow has to get the cost lower. Dow has to see an order increase, and they don't have that in the cards right now. So I feel very badly at that, but that's the case. Let's go to Sean in California. Sean.
Hey, Jim, what's up?
Not much. You tell me, Sean.
Hey, so what I'm interested in is knowing if you think I'm doing the right thing, adding to SGHC while it's on its way back up.
Supergroup. You know what I have to tell you? Supergroup finally broke out. We've been waiting and waiting and waiting. Now it's breaking out. It is an inexpensive stock, and I would hold on to it. It's very funny. I hadn't have done some work on it today. You want to own that stock. Let's go to Susan in New York. Susan.
Hi, Jim. I'm a repeat caller and a dedicated and most appreciative fan. Thank you so much for all that you do.
I'm just going to keep trying to make people happy, make some money for people. I was so glad when we did that Mezcal trip with my wife in Texas. So many people came up to me. They were NVIDIA millionaires. They made me feel great. But keeps me young, I'll tell you that. How can I help you?
Okay, well, I all for what you just said. I'm interested in SSM, Sprouts Food Market.
You know, when we had them on, I was stunned because I just could not believe that I had not talked about it more. It's a place that my daughter absolutely loves. It's right. It's like the purloined letter with me. That is a great stock. I do not care if that stock's 142. If you bought it on Monday and it went down to 132, I just tell you buy more. And if it went to 122, buy more. That is a quality operator. I'm going to get them back on. That's how strongly I feel about those guys. Let's go to Paul in Missouri. Paul.
Hi, Jim. I'm a long-time viewer, first-time caller, and I plan to join the investment club soon.
Oh, I hope you do.
Okay. I'm asking about Innodata, ticker INOD. I bought 100 shares on September 9th at $14.01 a share.
Well, I lived at 1401 Cromwell Road. That's about as close to my knowledge of Innodata. I am going to huddle with Ben Stoddard, who's our chief scientist and also engineer, and we're going to figure out about this Innodata and make some and we're going to do a little homework on it. And that, ladies and gentlemen, the conclusion of the Lightning Round. Voluntary or mandatory? Jackboot or persuasion? This is what I've been wondering since I heard Robert F. Kennedy Jr. could become the Secretary of Health and Human Services. Now, this department's huge, 83,000 employees, rules Medicare, Medicaid, the Food and Drug Administration, the National Institutes of Health, and the Centers for Disease Control and Prevention, among many other departments. It's incredibly important. You could argue it presides over some of the most well-respected bodies of scientists and researchers on Earth. And it's about to be totally upended because RFK Jr. wants to undo some of the biggest public health advances of the last century. For example, Health and Human Services is all about disease prevention, and the best prevention is often a vaccine, one of the greatest innovations of the 20th century. We've stopped polio, measles, mumps, smallpox, hepatitis B, and most recently COVID, among many others. Vaccines are also one of the few industries where the United States remains the global leader. Unfortunately, RFK Jr. is an avowed anti-vaxxer, and the anti-vax movement is pretty strident. Will he suggest that vaccines be voluntary, or will he demand that they be stopped? If it's the latter, that's going to cause an insane number of preventable deaths. There's a reason Moderna stock was down more than 7%. Their whole business is vaccines. So this guy's on the other side of some of the greatest work that medical science has ever produced. At the same time, he's taking an aggressive stance against junk food. He wants to get rid of all the processing and chemicals in this stuff. Now, maybe that would be healthier, but it would definitely upend the food industry and wipe out a ton of profits. Now, it's hard to imagine processed food companies not processing food. RFK may be on the right side of history on this one. I think that's the case. However, he's on the wrong side of powerful interest groups that have defeated many attempts to make food healthier. Plus, there's the cost issue. I'd love to live in a world where everyone eats organic and natural foods, but that's really too expensive. The devastation of the packaged food stocks this week is because of the RFK rumor and then appointment was really just extraordinary. PepsiCo, the owner of Frito-Lay, was down almost 4% today. Hershey's been obliterated, down 4.5% after a real hard outing earlier. General Mills lost 2%. J.M. Smucker has been getting blasted. Today it dropped another 2.5%. Kraft Heinz just created 2%. We haven't seen anything like this since the introduction of GLP-1 weight loss drugs when it took down the whole group. Now, for me, this feels reminiscent also of the penalties some stocks suffered under Trump in the first go-round. What started off sounding like a jackboot morphed into harmless slippers, ultimately, though, and they created some fabulous buying opportunities. There's only one problem this time around, the stocks themselves. I don't know if I want to take a chance with the vaccine-related drug stocks if Bobby Kennedy Jr. is going to run Health and Human Services. Frankly, why stick your neck out here for any drug stock at all? They're not what you buy when the Fed's cutting rates. Same goes for the food stocks. Don't touch them when the Fed cut rates. Even if you think the RFK nomination will get torpedoed in the Senate, they're just not good investments at this point in the business cycle. In the end, I think that no matter what RFK does, it's mighty hard for the federal government to lay a glove on big pharma or the food industry. For what it's worth, if you want to know what works, Bristol Myers, they've got a revolutionary schizophrenia drug. Eli Lilly's got its amazing GLP-1 franchise. That stock's getting killed. They both make sense to me. Bristol Myers is more intriguing now that a potential rival, AbbVie, just had a failed clinical trial for another schizophrenia drug. Food stocks? Well, what's RFK really going to do to Frito-Lay? What's he going to do? I put a warning label on it? Again, though, even if these stocks have pulled back, they tend not to perform well when the Fed's cutting rates, so why bother? So I still have one, though, Mondelez. It's a terrific snack food company that can beat the numbers, in part because only a third of its business comes from the United States. Ultimately, if RFK dons jackboots and demands that we don't have vaccines or eat junk food, it probably won't matter. The interests within the government, notably the staff, will push back, and the food lobby will push back. And most important, Americans just don't like being told what to do. But for now, nobody wants to take a chance on these already out-of-favor industries. And you know what? I can't blame them. Like I said, there's always a bull market somewhere. I promise I'll have just for you right here on Mad Money. I'm Jim Cramer. See you Monday.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC, NBC Universal, or their parent company or affiliates, and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Jim Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.